Hello again, everybody, and welcome to the Options Mentor. Well, here we are on the Friday after a very eventful week with an FOMC announcement, a quarter point rate hike, the non-farm payrolls, the unemployment rate coming in, looking like the economy is improving. You would think that that would make the participants in the market a little skittish, thinking, hey, if it looks that good to the Fed, they'll keep on with the hikes. But for some reason, we're rallying today. Best I can tell here on Friday. Is it's just Apple's earnings? I don't know, but they did well. So I want to talk to you about a trade coming into next week. So let me share my screen here, and we're going to start off looking at the VIX. Now, as you guys know, that's what I primarily use to tell me what trades are even in range. And whenever we're below 20 on the VIX, that's most of them. That's the butterfly. I like to do different ones, short-term, long-term, calendars, diagonals, double diagonals. You can do all those with the VIX under 20. And indeed, the VIX right now, 16.94. Now, the reason I don't like to start a trade many times on a Friday is because the market makers already have adjusted around the volatilities to, in a sense, you'll take the weekend risk for nothing, because I think you'll find out. I'm going to model a calendar here shortly. And when I do, if you look at what the price is now, if we don't move a whole lot, it'll probably be very similar, may even be cheaper Monday morning. At least it won't be much more at all, maybe 5 cents, if that. So it's always better to wait. Then you don't have to worry about that big move on Monday morning pre-market, a gap or something, and anything can happen in this crazy market. So let's start out with an SPX calendar. Actually, I was going to talk about a calendar, but you know what? I'm going to talk about a diagonal instead. You got to go with the flow sometimes. Now, the diagonal actually is what I call the calendar's cousin, because instead of having a short and a long, the same strike in two different expirations, you're going to have, as I've shown you before, the long in a different expiration, but it will be, if you do a put diagonal, higher up than the short put that you sell below. So if we went out here to next Friday, so let's go out here to next Friday in the SPX. Oh, I've already got it loaded. We're trading at 41.40, 41.39. And what I loaded here was going out to next Friday, selling the 41.40 put, buying the 41.50. Let's take a look at this. Now, why would a person do this instead of a calendar? Well, a calendar, you kind of have equal risk in both directions. When you do this put diagonal, if we happen to come down, you do a lot better. Now, if we go up, we're going to have to make a move. I'll show you here in a moment. But I think after a big move, we've had some big moves up this week. Here we are up almost 80 today. Who doesn't think that it might be time to pause, to maybe drift lower early into next week? It wouldn't surprise me a bit if we do. So I kind of like this trade where you have these short deltas, and you put this trade on Monday morning, somewhere around, maybe just place your strike, your long strike, 10 or 15 points above what we're trading, and then sell the short 10 points below that, like I've done here. And away you go. Try to get 10% of the cost of the trade. The cost of the trade is whatever you pay for it. If I bought this here for $760, well, 10% of that's $76. Maybe try to get yourself $80, $90 to cover fees per contract. That would be 10%. So if it goes down, you just take whatever profit you can get down here, right? What if it goes up, though, Mark? What if we run up? Well, here's what I would do. If we get to 41.70, then what we're going to do is we're going to go to that same expiration, which is the 12th of May. And if we're at 41.70, we're going to buy a call diagonal, and we're going to have our long at 41.90. And then we're going to sell the 95 call, 5 points higher. Now let's see what this looks like. So first off, let's see what we got. So if we're at 41.70, you can see we're in trouble, right? But if you buy this here, now look what happens. Now I'm back in the middle of a graph, trying to get 10% of everything I have in this trade, and I'm back in business. Now, if this trade happens to come down on us, well, no worries, right? We'll just take it off at some point at a profit. So that's the idea. You put this on. If it runs up to within about 10 or 15 points of your upper break even, whatever that may be, because Monday you may put it on at a different short strike. But if in this case, if I got about 10 points away, then I buy my long about 20 points higher. So if we were at 41.70, you're buying the 90, selling the 95, and away we go. And you're set. So that's an idea for you coming into Monday, assuming that the VIX stays under 20. We'll see how this weekend develops. As always, I appreciate you guys joining my channel. Please tell your friends. Don't forget to hit subscribe if you haven't. Like the videos if you like them. And let everybody know this. We're really growing pretty good with this. I got a lot of ideas on what more we can do in the future. So let's keep it going. And I will talk with you guys next week. Have a good one. And as always, let me know in the comments what you think, what you want to see. If you did any of these trades and they worked out for you, let me know. Thanks. Bye-bye.